Yo, what's going on, y'all? So today I'll be doing a trade recap for July 19th on a Friday. Typically, based on my personal data collection, I don't do the best on Fridays. Typically, in terms of profits, like the typical amount of RR that I make, Fridays are my worst in terms of how much RR I'm making. So sometimes I try to take a 3-day weekend and just take Friday off. But today, I decided to trade New York session on a Friday. So anyway, I'm just going over my trades today. I did not trade euro or oil today. I only traded SPY, ES, and gold. So those are the only two trades I'll be going over today. And yeah, that's basically it. So today I woke up kind of late. I didn't start trading at my typical 8:30 time clock, 8:30 a.m. for my gold. Okay, so for gold, I didn't start trading until 8:30 a.m. Right here. And this trade was perfectly within my kill zone session. One quick thing about timing in terms of kill zone and when your trading hours should be is the reason why I have this set time frame is based on data of volatility, right? You can find this information on websites, online. You can also just look at your chart. You can see this on the chart clearly based on volatility and volume that there's a lot more better movements and setups that occur during this time frame than outside of the time frame. But that does not mean we cannot trade outside of this range of time frame, right? If there's a very high quality setup, but most importantly, if price is really moving very well, right, in terms of volatility, and still maintain that volatility without making choppy small price action moves like this, then you can still definitely trade during that time. It's just that I tend to try to my best to fit my trading into this time range because this is, for my bad testing, what has the best price action, and ultimately this gives me the ability to use my time effectively, right? Because time is very important. You can't buy back time in your life. Time is one of those things that you just cannot buy with money, right? But you can buy potentially health, right, with money. Okay, there's a lot of things you can do for that, but the main thing is you can't buy back time. So I like to use my time as effectively as possible and efficiently as possible. So let's just go over today's gold trade. About 5-hour trade here, 5.38, okay. Trade right here. I woke up around 10, I believe, today. I'm not sure, 9:30-ish, 10. So woke up around when price was looking like this. I decided to just not trade euro or oil today, just because I woke up pretty late. And also I can show you guys the chart for, actually I can show it right now. On oil today, as you can see, okay, later rest of the afternoon, we just continued dumping, right, on oil. And I woke up just at a bad time, right? At a bad time where I missed my potential entry here. You guys can see we had the OB set up here, entry right here, OB type. We could target low, would have been 6R, but I missed that. So, and then once I was seeing price continue this continuation on oil on the 1 minute, you can see more clearly on the higher time frame. This is one big fat candle with no pullbacks like this. What I'll tell you guys is this is not really tradable conditions for my personal criteria, right? These pullbacks are very, very small and could easily be inducement. You never know. So this was just not tradable for me at all. And a euro today, let's see, where was today? Let's turn on the sessions. Pretty choppy today, right? Look at this price action here. This is also not very tradable. This is extremely hard to trade, at least because it's in such a small range for us on the 1 minute. You could definitely catch trades with limit orders here, but you'd be trading with inside such a tight range and your risk reward is very, very small, right? Maybe 2R, 1R. I tend to stay away from those kind of trades because this is not worth my time. So bad market conditions on euro and later on oil today. Now good market conditions was on gold today. We had this big range here, right? But we later on expanded, giving us this very nice solid range to trade off of. This is very nice range. Why? Because this is all imbalance right here. You can see prices creating all these fair value gaps, all these imbalances right here, leading you to potentially you could use an impulse model here, right? Because this range, I would say, is small enough, but the main thing is look at how price delivered. Price delivers so nicely here that you definitely could have taken an impulse model entry here off the candle break. And so this is based on my analysis here, right? We have an internal break of structure here to the downside. Why? Because we swept liquidity here. Okay, what happened here was we made a low, we had a small pullback. Inducement is essentially a small pullback that creates a new low, but this is not a very valid low to me, or it's not a valid break structure because this pullback was too small. But there it came back up. You guys can see, based on what I teach you guys about wick and body closures, we swept this and quickly came back down, meaning this is now inducement here that got taken out. And then I can now mark this as my internal break structure. Okay, we later on made a change of character here off this high, which should have been strong. So I also changed my template here. I made this my strong high now, so this could my strong high marking instead of text. It's easier to see. This is not a strong internal change of character for me because it's a wick closure, right? Very, very weak closure, but that means we can still potentially go up, right? Still potential. All depends on what's going on the very far left in terms of POIs here, right? On the very far left over there. I'm not gonna go over there, but you see that if you go check it out. And then basically what I saw here was we had an origin down here, so I marked this as an origin, right? You could have had a potential trade here to trade back up, either using risk fair value gap entry, or you had a fair value gap entry here, but not exactly at the OB, right? And usually when there's a tiny like difference in terms of risk reward, for example, let's say you take an OB entry, you target there 8 risk reward versus a 7 risk reward, is roughly not that much of a difference, especially when it's this high up in terms of risk reward, that you don't mind. You can also take just the beginning of the fair value gap as your entry, and you would have 7R still. Better than no R at all, right? So once this internal change of character occurred, you could potentially see this low here as strong for now, right? For now, just for now, because we know externally we are still very bearish. So for now, we are still maintaining bearish structure on the external structure, but internally we have this internal pullback phase here. This is our mitigation phase here, retracement, whatever you want to call it. And then I was basically looking for price to take out the high, right? Obviously it's going to take out this high because we made a change of character previously, internal break structure. And then on the 15 minute, go on the 15 minute. Let's see, where are we? Okay, on the 15 minute, we had a 15 minute OB here. As you can see, 15 minute supply. I marked it as my origin. You can also refine this if you want. There's a 5 minute buy to sell here, right? You can refine it there, and price perfectly tapped into it, right? And then we basically were looking for entry confirmations now. And typically, if the zone is too big like this, I don't like limit orders because the risk reward is just not the best. In this case, it wasn't too bad, but yeah. I waited for an OB entry here because I missed the impulse model. So OB entry right here. Okay, usually another thing I wanted to mention is, I think I made a mistake when I was talking about this, but if we had 2 OBs created, we want to take the second OB because it's a lot less likely, almost never, price comes back to the first OB, original OB. Majority of times price will come back to the second OB, like the nearest OB created, which was that one. So I have my limit order there. We already had good confirmation. Entered the trade. Where did I break even? I managed my trade here. I had the structural break. Okay, this is where I broke even here on this trade. Nice body closures, great break. And we're safe to essentially go break even on that trade and let it run. Now the main thing for this trade was turn line liquidity here, right? We also want to see how price is not only delivering to our POI, but how price also delivered to the POI before that, if that makes sense, right? You can see clearly we had trend line liquidity here, right? So let's say you were looking for longs here, you would anticipate and safely target this internal break structure here, internal high here. Why? Because you can see how price delivered previously. We had trendline liquidity previously delivered, meaning we're likely to run that out, like I mentioned to you guys. In this case, this trendline liquidity, I'd tell you guys, trendline liquidity is the same as chain and block flow, right? This is all just block flow here, just holding. You guys can see, we're just holding block flow. We're making fractal lower high, lower lows. That's like what's going on here, block flow, especially if it's already mitigated, which it is here. You guys can see there's no imbalances or whatever here. It's going to get ran fast. And that's why the market made such big imbalances. And once we taken this trade, essentially I broke even here. This trade lasted quite a long time, I'm not going to lie. This was what? 11, 12, 1, 2 hours. So quite a bit of time here. Not gonna lie, most of my trades, winning trades, are 30 minutes based on my data, and then losing trades are typically 5 minutes. So I will know if I lose the trade quick. Yeah, so I marked out this trend line liquidity while I was break even because I was seeing price could potentially come back up later to take out this trend line liquidity, which made me change my price target. Originally, I was targeting this low as a weak low because I was expecting a QM model here that teach you guys. The QM model right here, meaning we're making a mitigation pullback phase and then we continue the expansion. I was looking for that expansion right here, but based on how price delivered here, it's very unlikely we create the full entire expansion. This doesn't look like an expansion price delivery to me. This is where experience comes into play. Typically for expansion, you will see moves that happen very, very fast, very, very sharp with minimal pullbacks. When you have a ton of pullback and structure created here, that is not a good sign for the expansion, right? Expansions happen fast, and this did not happen fast. Therefore, I was anticipating we could potentially might actually hold this origin right here. We had an origin here that's unmitigated. So we could potentially actually hold that origin to go back up. Now, I just targeted this low here because I was still trying to look for external liquidity to target here. You could also target the origin here, but I decided to just hold my trade to that low here instead of the extreme low, and also based on time, right? It's been 2 hours. I don't like holding my trades for that long, but the main thing is putting everything into perspective. Look at the time. It's already 12:30 p.m., way outside of my trading session in terms of volatility, and based on how price is delivering, it's not going to be the best market conditions after, right? Because it's already delivering like this, not very clean. You can expect it later in the session to just be choppy as well. Like this right here is also bad market conditions. This is really not tradable for us. You can definitely take scalps. You can definitely take scalps, but I'm not a scalper type of guy anymore. I used to. The main reason I stopped is this just takes too many trades, right? I don't want to be taking all these trades, like taking like maybe 70% win rate, 60% win rate, taking all these trades. I'd rather just take one clean, solid trade, break even, and then let my day just continue as normal, right? So 5R here today on gold, and that's basically my analysis, right? So overall, you guys can see I'm expecting, since we held this origin here, right? We had a wick closure here roughly. Price came back very quick. We held this origin here for a bit before coming back up. I was actually hoping later on we hold this origin to continue lower, but it seems like we're holding this demand. So I'm likely seeing a retracement back up here on gold, taking out all this trendline liquidity, come back up here, potentially taking out this high as well, and then doing a bigger pullback back up to this potentially higher time frame flip up here before we potentially come back to take out this external low, unless we have finished a higher time frame on the left, unless we've already finished a higher time frame retracement, right? Because higher time frame, like on the daily, we are still extremely bullish. It's just today was a bearish day. My daily bias indicator also mentioned that as well, and that's another thing I want to mention. The indicators for everyone that has bought the advanced course specifically, all the indicators are 50% off. So just DM me, I'll give you guys the discount code. It is going to be a one-time use. And basically all the indicators are 50% off, right? I also decided recently to sell my POI indicator here. You can adjust your active trading time, session borders. Those will draw out the borders of your trading session. This shows discount and premium basically. 50% calculation. This is the algorithmic calculation I use to distinguish between discount and premium using time. And then you can change your zone colors, of course. And you can also show secondary time frames like the 5 minute. Like here, I'm on the 1 minute chart, but I can see 5 minute OBs, which is very useful. I always have this indicator on unless I'm journaling, where I take it off so my charts are cleaner. But very, very useful indicator that I programmed. You can also add alerts on the indicator. So when zones are hit, it'll send you an alert, right? But I don't do that because sometimes, like I mentioned, I like to use discretion in my trading as well. I teach you guys from experience, and there's certain zones that I will not take. So I like to mainly set my alerts, but that's all up to you how you want to do it, right? And attempt it. So for me, that was on gold and ES today. Now, if you guys don't know, SPY and ES are the same thing. SPY is the ETF for the S&P 500, and then ES is just the futures version essentially, right? So today I had a bearish bias. Daily bias was also pointing bearish, okay? you can see we expected this supply in from pre-market here. Okay, we had a supply OB here. We respected it. We actually did not really close above. We potentially swept it by a little bit, and then we continued down. We made our first break structure here, so I marked that. And then the next thing, what happened is I marked this as inducement here. Okay, you don't even need to see what happened here to know this is already inducement. Why? Because it's made a new internal structure low. However, we never did a big enough pullback to at least the origins here, right? So because this pullback is so minor, I consider that as inducement. We came back up, we took out this inducement, and then we did not tap into a POI in this case. I was looking for this POI here, because this POI is the POI that broke this previous low and made it weak. But we never tapped it. And what I tell you guys, whenever inducement is taken out, if we marked inducement correctly, we can expect the market to reverse immediately. Meaning we can expect it to give us entry confirmation and we just enter off, just taking out that inducement without having to wait for a POI to get hit, because a POI may not always get hit in this case. In this case, inducement was literally our liquidity sweep. You can market that if you want. This is literally our liquidity sweep. And then OB entry here, stop loss at the high, target the week low, boom, break structure, 4R right there. And then same setup occurred again. We had another inducement setup here. So this is a perfect day to explain inducements, right? This right here was outside my trading session time, but based on how the market is delivering in terms of market conditions, this looked very, very nice. These are not very tiny ranges like gold, like it showed, or oil where it keeps going in one direction without stopping. This is very nice, solid big ranges for us to trade on the 1 minute, creating nice inducement and structure. So why not make more profit, right? Why not make more profit? In here, inducement here, we didn't have a big enough pullback to the origin here. And when we came back, we took out the inducement, but we never tapped into the origin. That is completely fine. And you can see we took an inverse fair value gap entry here for our target week low. It's that simple. And of course, these trades, you can also target way further than the recent week low. The main reason I target the week low is because sometimes what price does is, or a lot of times actually, price will do this. Today was just a very trending day to the downside, but majority of times price will take out the week low, even though it's weak, break it a little bit more, come back up to your entry to like an origin, and then continue this downward trend. So if I was at break even, for example, I could potentially hit break even before it runs even further. And I'm not a fan of hitting break even often. I don't like doing it. I'd rather secure my 4R, and then if price comes back here, gives me another confirmation, I will enter again and make more profit that way. That's just my personal rules. If you don't have a break even rule, you just set and forget, then yes, theoretically you could definitely aim for bigger targets like that. And in those bigger targets, you would be looking on the higher time frame on the left, very far left, or you can trail your stop loss as well. That's when I would recommend trailing your stop loss. You can do it through candles or structure. Took out again inducement. Okay, we had a body closure on the 1 minute, but if you go on the 5 minute, I don't think we did. But we had, most importantly, entry confirmation, and boom. This is a very nice entry confirmation of an inverse fair value gap. And if you guys see, if you didn't mark this as inducement earlier, you would have taken this POI, right? If you marked this as a break structure, which it's not, but if you did, you're basically saying this high is strong, and it's not. It's a weak high. The strong high is all the way up here, because this caused a break structure, right? So once you guys can see, you would have gotten a loss here, an OB entry here. You actually could have broke even here, low key, at this low, intermediate low, but that's a very close break even point, right? So maybe you took a break even there, but you guys can see why anticipation of prices is so important and will drastically improve your win rate. Once you take out inducement and then we make a new low, what I tell you guys, once we run inducement and we make a new low, then that is our next strong point structure. So now that's our next strong high, and then you guys can see I stopped trading after that. 8R secured. That is already extremely nice for me in terms of the trading session. I'm not interested in really trading more, and that's honestly good because market conditions were so stalled here. This is still pretty good market conditions. This is still tradable, right? It's just not the best delivery going up. This is all just holding block flow going up. Not like one clean move, but just internal. Like if you're trading on seconds, this would have been good market conditions, but I'm not trading on the seconds like that. So you can see we had a supply here, okay? And then we price essentially did some sweeps before dropping down and holding this low. This low should have been weak, but it wasn't. And therefore what happens? We got confirmation, price went up, and now this high is actually now weak because this is a failed breaker structure, right? Once you get confirmation here at a valid POI, you can mark it as a failed breaker structure, anticipating the other side to be weak and taking out as liquidity. But for it to be confirmed, you would need this other side high to be actually taken out with hopefully a body closure, right? So that's exactly what happened. That's how you can anticipate price and not get wrecked trying to short here when you see we failed to break the structure here. So that's it for today's recap. Definitely a lot of stuff. I feel like there's a lot of gems in this as well. You guys can definitely take away. In the trade recaps, I will include a lot of nuanced stuff that I may not have mentioned in the course, like the main course content educational section. And this is just me from my experience, and I think doing it through trade recaps is most beneficial because you guys can see how these concepts are literally applied on the chart in real time from my trades. So I hope you guys enjoyed today's little episode, trade recaps. I'm gonna try to do these weekly, and especially when I find good like examples of what I teach you guys. If you guys have any questions, I will do recaps on those because you guys can learn the most from those. So again, that's it for me for my trade recap for July 19th.